Welcome, dear traders. You are watching a recap of the Asian session. On the Thursday, Wall Street closed with losses. Australian stock followed suit. The equity market in Japan rose significantly in the morning. It recouped some of the losses incurred in the previous three sessions. Let's discuss what trend prevails in the markets at the end of the week. Optimism on Wall Street waned quickly due to mounting uncertainty. Inflation in the United States is slowing down. The initial jobless claims report released yesterday came out at the lowest level in several decades. As a reminder, earlier this week, Jerome Powell called the tight labor market one of the main reasons for further rate increases. Judging by fresh reports, the labor market is losing steam. The unemployment rate is not rising. However, several Fed policymakers warned that the regulator would stick to monetary tightening. Investors also took notice of Fed Richmond President Thomas Parkin's comments. He acknowledged that the economy is slowing down. It just makes sense to steer more deliberately as the Fed studies the impact of a monetary policy on the economy, he said. However, it needs to see if inflation continues slowing. Such an approach increases recession risks. U.S. companies also reported a drop in their net income. This is why risk aversion in stock markets is quite logical. Yeah, there is no panic there, although the VIX index climbed slightly yesterday. It's located near 20, and it indicates the high chance of an upward reversal in the stock market. The US dollar is also rather volatile due to market uncertainty. Hawkish comments of Fed officials are pushing it higher, but recession fears undermine its upward potential. Investors are now focused on inflation data, which is on a tap next Tuesday. The region is projected to drop lower, however, forecasts may differ dramatically from actual figures. The recent NonFarm Payrolls report is a good example of it. At the end of the week, the greenback managed to rise amid improved demand for safe haven assets. The question is how long it will last. In the morning, it was trying really hard not to dip below the psychologically important level of 103. In the Asian session, it was fluctuating in a narrow range of 103.10 and 103.40. It failed to consolidate above this range and fell to 102.90 versus its main rivals. As for the yen, bears retreated in the morning, and the dollar-yen pair returned to 103.10. At the beginning of Friday, the yen rose considerably against the backdrop of a risk aversion. It entered the intraday range of 129.80 and 131.80, a certain strength versus the US dollar. It was able to climb amid positive internal factors, although the comments of a Bank of Japan policymakers were mixed. Traders got some positive signals. Investors are now closely following news on the appointment of a new Bank of Japan governor. They are trying to predict the next steps of the regulator based on this information. Haruhiko Kuroda is due to step down on April 8. He was served 2 5-year terms in this post, and he remained committed to an ultra-loose monetary policy. The Japanese government will present its nominees for the next Bank of Japan governor and its 2 deputy chiefs next Tuesday. According to the media, Bank of Japan Deputy Governor Masayoshi Amamiya is likely to succeed incumbent Haruhiko Kuroda. Notably, he said that he sees no need to change the monetary policy parameters. Minister of Finance Shonichi Suzuki also delivered a speech today. He believes that the ultra-soft stance was appropriate in the past. However, the government should discuss further actions with its new Bank of Japan leadership. The Australian dollar slightly advanced amid the Reserve Bank of Australia's remarks. The regulator upwardly revised its inflation forecast and stressed that rates would be raised higher. However, the Aussie also faced bearish pressure, namely the Fed's hawkish comments and the risk aversion. So the AUD-USD pair kicked off the day at a low of 0.6911. The AUD-USD pair was moving along the upper border of the range located at 0.6961. The Aussie failed to escape the bearish lows, extending its losing streak. It was hovering at 0.6953 amid pessimistic inflation data from China published today. The New Zealand dollar also sank following downbeat macro stats from China. It decreased to an intraday low of 0.6303, and later it managed to recover to 0.6340. New Zealand is one of China's leading trading partners. This is why money injections by China's government and the rise in the yuan bolster the kiwi as well. In the Asian session, it entered the upward channel of 0.6302 and 0.6346 amid these drivers. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. See you soon.